Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. Hi, everybody. Very excited to share my interview with Gary Yeoman. He is the CEO of Voxtur Analytics, which is a real estate technology company. It is publicly traded on the venture. It's VXTR. Interestingly, we think so much about real estate in terms of our own personal wealth, likely caught up in our own homes and maybe some additional properties or investment properties. But it's perhaps also important to take a look at the technology that supports all of those transactions, which we know have really been on fire in Canada over the past number of years. In fact, CREA reported today that existing home sales are up by 39% year over year, and that selling prices, the average selling price, is up by 25%. But stepping back, in order to allow all of those transactions, to facilitate those transactions, you've got the appraisal process, the tax assessment process, and also, of course, title search. So there's these really interesting companies, tech companies, that are supportive of it. So PropTech, think PropTech. Gary Yeoman, who I interviewed, who you'll hear from just in a moment from now, he actually started the Altus Group, which is a software and data solutions company, a tech company supporting the real estate market. And he has now founded Voxtur Analytics. He was actually also one of the first investors in Real Matters, another prop tech company. So, kind of an interesting area to learn about within tech, and kind of leverages what's been going on in real estate, but using a tech company to kind of get that exposure, if that's of interest to you. So we had a nice long conversation just about the company, the industry, and also a little bit of his outlook on the Canadian real estate market. So take a listen. Hope you enjoy, and always happy to hear your feedback. Thanks so much. Gary, great to be able to get together with you and to interview you about your company and everything that's going on within prop tech, or the digitization essentially of the real estate market. I think that there's so many people, of course, who are focused on real estate, their own properties, and or investing in real estate, but don't really know a lot about the technology that goes on behind the transactions, and so importantly, also the developments that are going on that could be really game changing in terms of how the real estate market and the technology behind it is able to develop and perhaps even increase transactions. So with that said, why don't we first start with what the company is set out to do? And I'd also say, Gary, why don't we have a little bit about your background so people really understand that you've been involved in this space for decades, I believe.
Unfortunately, I'd like to say that I haven't been, but I have. That's correct. I guess I go back in my earlier days. I headed up Frank Stronach's real estate department at Magna International. So we built, during my tenure, about 40 million square feet. And so I essentially was in charge of all the buying, the selling, the leasing, the construction. And so really had a nice introduction to the real estate industry as a whole on a global basis. So that was a great opportunity for me to get introduced to the real estate game. Subsequent to that, being around all these entrepreneurs, and I really felt that it was something that obviously I had in me. And so I started my own business around 1996, 97. And ultimately that became the Altus Group. So I took that public in 2005. We built that up to 4,500 people in 62 countries, and is now trading somewhere around $2.5 billion on the TSE. While I was at Altus, I also invested in a company called Real Matters. I put the first $10 million, actually ended up to be 11, into the company for 50% of the company. It essentially was an appraisal management company where they worked with the banks to facilitate appraisals for mortgage purposes. So they've grown that business significantly. I was involved in getting them their first major client, which is Bank of Montreal. Brought Bank of Montreal in to provide their debt facilities, all their treasury facilities. They took them public. And so that's as you will probably hear later, show
Mhm.
me a really good company and I'll show you a really good bank that's behind it.
Oh,
So,
interesting. Mm.
so there's not very many companies that are in the small cap market that have the support of a Class A bank. And so when you have that, it's certainly a gateway to success. Not the only gateway, but certainly fundamentally gives you the opportunity to raise money in debt without liquidating your company through equity. So it was a big step.
Hmm. And so then talk to us about Voxtur in terms of, how that company came about. It seems though it's somewhat of a series of acquisitions, but also, what was the mandate from your mind in terms of setting this up?
So after I left Altus, there was a little company called iLookabout. And in the early days, they focused on imagery and they were taking inside and outside pictures, of real estate and working with the real estate boards. And they subsequently went public in 2008. They didn't have a great journey along the way. Technologies changed, they didn't adapt. And so they had a lot of difficulty. I knew about them when I was the CEO at Altus. They had indicated an interest for us to maybe, take them over. And it just wasn't part of my strategic plan at Altus at that time. So when I left Altus, I got in and I ran an investment bank for a little bit and found that wasn't fundamentally something that, that was in my wheelhouse that I really enjoyed. I enjoy businesses, but I don't necessarily, sorry, I just, but I don't necessarily, I don't like to fix them and then just leave. I like to build businesses. So I got on the board of iLookabout, looked at the company, looked at the strategic plan and vision. And quite frankly, I love the people. I thought they have great talent. I thought that there was a lot of opportunity to go forward. I started getting introduced into what technology could do for real estate. The company wasn't doing well. So ultimately I came to them and said, listen, I think that we have a great opportunity here to build something special, but it's not going to be done, with the strategic plan that we have and in the manner that it's going. We were sitting at around $10 million of market cap. We were losing money. They had problems with the share structure. So I said, listen, I'm happy to take over. I'll put my own money in, which I did, about $2.5 million, to straighten it around. And it took me a little bit of time, but I took over as CEO about 2.5 years ago. And today we're sitting at, about $500 million. We're cash flow and EBITDA positive. I purchased, let's say to be almost 3 businesses shortly.
Mm-hmm.
And so it's something what I did at Altus too. I think that if you can find good strategic businesses where they're accretive, they're in your wheelhouse, in our case, technology and real estate, and they're synergistic where you can maybe cross sell between, similar clients and that at, an attractive multiplier, then that's something that you should take advantage of.
So, Gary, stepping back though, for people who are listening to this, whether they're institutional investors or retail investors, a lot of people kind of just think about the one area of real estate that they might know. It's probably their home. If they're in commercial real estate, it's maybe getting the best property at the best price. But there's so much that goes on behind the scenes. So I think from, understanding the verticals of what has to happen when a property is purchased and or sold, let's walk through what those buckets are, because it seems to me that Voxtur is involved in all of them.
Yes. So let's look at it simplistically. Most people have been involved one way or other in purchasing a home. So the first thing that you typically do when you purchase a home is you contact a lawyer, and he needs to facilitate the whole transaction with respect to changing of title. While he is there, a valuation has to be completed for the purposes of a mortgage. He has to place title insurance. He has to make sure that you got insurance on the house. You have to look at the property taxes to make sure that they're paid. You should also take a look at the property taxes to find out whether they're too high or too low and by how much. So when you look at that total 365-degree circumference as far as how you and what you do to get involved in purchasing your house, we touch every aspect of that field. We do valuations for mortgage purposes. We work with all major lenders across North America. We have an ingestion engine where we provide title insurance. We have a tax analytics platform that tells you whether your taxes are too high, too low, and how much. And so all of that is built through technology We have a single portal that we work with, and we're able to do things quicker, cheaper, and certainly more accurate.
And so let's go through some of those buckets, though, in terms of why your technology allows you to be differentiated. And from what I also understand, have significant margins, or at least margins that are very much in line with true tech companies, software as a service platforms. I don't know, maybe that 70% level, which in today's world, when you even just think about what we get paid on our own money, 70% everybody will take all day long. So when you think about, I don't know, why don't we start maybe with valuation in terms of what your company provides versus what's out there today?
Well, we are evolving. My goal right now, if you were to look at us holistically right now, we're about 25% software as a service, and the other 75% is made up between data analytics and some consultancy that we're providing. My transformational role with this company is to get us up to 80% SaaS related and provide that 20% primarily to be able to service the product that the SaaS is giving. And so that's our goal. And you're absolutely right. We'd be disappointed once that transformation takes place not to receive plus 75% margins. And so that's, why you see today that SaaS related companies generate 20 to 30 times multiple of revenue versus companies that are data and analytics, which are typically, trending around anywhere from 4 to 7 times.
Interesting. I didn't know that there was that much of a disparity because we talked so much about the importance of data and analytics, thinking I would have thought that would have been higher, but I guess, it is still a software as a service. But when we think about, as an example, taxation, what does your company provide on the taxation front?
Sure. I've been involved in property tax for many, many years. I actually wrote the policy manual that defines property tax and assessment in Ontario. So our company, in, I guess about 5 years ago, we introduced a platform called Real Property Tax Analytics. And all it is a simple predictive analytics tool where we take a look at data, we take a look at the assessments, and we're able to tell you whether your taxes are too high and too low and by how much. Now, when I say simple, it's not simple with the algorithms, because essentially you can take a look at properties that have sold and say, okay, my assessment is lower than the sale price, so it should be okay. But that's not entirely correct. You also have to look at properties that have not sold and are similar to yours in the vicinity, because you could have a house that sells for $1 million and your assessment is at 900. You could say, well, I'm fine. But what happens if you have other houses in the area are selling for 1.2 million and they only have an $800,000 assessment? So you do have to look at equity as well. So when we built our algorithms, we not only looked at sales, we looked at equity, plus we also took into consideration, how does the tribunals, when they make decisions on whether assessment is correct or not, how does tribunals look at that? So I built in all of that into our algorithms, and we've got a predictive analytics tool. It's currently being used by many municipalities in the province. And hopefully within the next few weeks, once the budget gets down, hopefully we'll be able to provide that to all 440 municipalities in the province of Ontario.
And why is that so important to the municipalities? And also, of course, we can think about it from an individual perspective. Everybody wants to make sure that they're, paying the right tax, particularly based on what their neighbors are paying. And some people fight their tax. My mother always does. She's 85 and has an MBA from Schulich back in the 70s. So she would be that person. But a lot of people don't know how to and don't have the wherewithal or the data even to present. So how does that fit into your business model?
Sure. So what essentially where we'll be going, and we're going to be starting off in the US first, because, candidly, the ability to have access to data in the US is so much more substantive than what we have in Ontario. And Ontario and then across the rest of the country, it's really closely guarded, the data. And so a lot of it is in the hands of, for example, the Municipal Property Assessment Corporation. The MLS boards have data, but try to get your hands on that and have access to that, is difficult. Where in the United States, if you purchase it, or in our particular case, we have access to all of the data in the US, it's much more open. I think is much more transparent, to be quite frank with you, because my view is that the more data that is open to the public, the more transparent you are, the better products you're going to have. And isn't the goal really to be fair to everyone, to be fair to a municipality, to be fair to the ratepayer? Have transparency and get it right the first time, instead of everyone kind of huddling data in their own little pockets and hoping that because you don't have data, you have an advantage. It's not the way to look at things. And so, you know, we're affecting change that way. We're working with the municipalities. And to your point, municipalities, property taxes is the largest provider of revenue to run municipalities. And I think, especially with the pandemic, there's a serious concern right now, because you walk down Yonge Street in Toronto or every other municipality and you look at stores that are closed up, you look at the vacancies in the office buildings, and they're great providers of revenue for the municipalities. Well, who is going to pay that if they're vacant? How are they going to pay that? And so I think that municipalities are going to be under tremendous pressure to be able to have substantive revenue to come in to be able to continue to operate. And so I think it's incumbent upon the municipalities that not only to make sure that the ratepayers are paying their fair share, but they shouldn't also be collecting any more money than what they're entitled. So you have all kinds of companies out there that'll, you know, for example, file appeals on your behalf. And everyone knows about them, and you know, they're very successful companies out there, and they save millions of dollars. And that's good, because if they're overtaxed, they shouldn't pay more than their fair share. But there aren't any companies other than us now that also look at it holistically. We have built an agnostic platform. Our goal is not to say whether it's too high or too low and just focus on one area or the other. Ours is to build a platform that says, what should it be? And so if you have egregiously undervalued properties, then don't you think that they should be adjusted? Because why should you pay more than your fair share to account for someone like, for example, in one major city, and I won't say who it is, when we applied our software to this to the municipality, we found 4,500 properties that weren't even taxed.
Wow.
Just missed. It happens. You know, you have registered subdivisions and then our plans posted over top, and through, you know, a myriad of different, you know, registrations, things get missed. And so our job is just to make sure to bring to the attention of municipalities what a proper and fair assessment should be. And we're not looking at whether something should be $200 more, $300. You have houses, for example, that are paying $10,000 a year, and a very similar house in the neighborhood could be paying $3,000. And it happens. But no one is looking at undervaluation. Everyone is looking at over. Our position is build an agnostic platform, bring some integrity to the process, bring some fairness for both the ratepayer and the municipality. We're bringing that right across North America. That's our plan.
And what's your expectation in terms of the rollout of that, and also the demand? How do you sell that story? Is it an easy sell?
I think it's extremely easy. What we're doing, for example, in the US, is we're going to roll out a platform called Confirm My Assessment. And I say for the cost of a Domino's pizza, wouldn't you pay, you know, $20 to determine whether your taxes are too high or too low? Taxes are their largest expense after debt service. So you can go into this system, you pay your $20, it will give you a profile on what your assessments and taxes are, what they should be. And if that's something that is proven that your taxes are too high, then you have an opportunity to do a printout, get a full report. You can walk that over to the assessors or go to a tribunal and you know, make that happen. If it's not something that's in your wheelhouse where you feel comfortable doing that, then we have an infrastructure in place to be able to represent you in that case. Now, I don't know anybody that wouldn't want to know what their taxes are and whether they're too high or too low. In the US, there's 140 million properties. So like, who would not want to know?
Yeah. Well, and I think we want to know here in Canada too, in Canada as well. What's the process in terms of rolling something like that out here? Just curious.
Well, you know, it's a bit of a challenge. So what we're trying to do is aggregate as much data as we can. And, you know, one thing is to be able to get that data from the municipalities so that they can operate their business properly. The other thing is to be able to aggregate that data, to be able to use a holistic platform, an agnostic platform that represents all. Now, that's something we're working on, but it's going to be a little bit more difficult. Getting even on your hands on data from the MLS or the real estate boards is difficult, because all the real estate boards want to kind of house that information because that's their secret sauce. So I think we have a whole education in this country to be able to effectively roll something like this out. But I think it will happen.
It's interesting, when we think about just, the public equity markets and everything that's been going on for the past 2 months as it relates to the Robinhood investor, and, people loving the fact that there's been almost a democratization of the markets with retail investors really kind of coming in. This almost has somewhat of the same vein. In other words, individuals can kind of take a little bit more control, hopefully at some point, in terms of just making sure that the system's working fairly for themselves in terms of the taxation on their properties.
Well, I think the Minister of Revenue, not the current minister, but the Rod Phillips, was on record saying, our responsibility is to be fair to everyone, both to the ratepayer and the municipality. And with that response, we had some hope that data and primarily data would be made available to everybody. And as a consequence of that, we could build our own algorithms and software applications to be able to roll something very affordably, very simply out, both to ratepayers and municipalities alike. And we're so hopeful that will happen, but we're just taking one step at a time here.
And so, Gary, we're talking about the taxation side of the equation, but of course, Voxtur is involved in other areas as well, the assessment. We talked a little bit about that briefly, but how does the company get the correct assessment of property? What's the right model for that these days? And also, when you think about the imagery that you talked about, in terms of making sure that I think that the property can't be fudged in terms of what it truly represents. How does that play into your technology?
So let's look at what happens today. So a bank will get a hold of an appraisal management company and say, we need a valuation on X property. And we need that because this individual is going to buy the property, and we have to determine what an appropriate amount that we'll provide a mortgage for on that property. So what they do is they go to an appraisal management company, they give them the address, they find an appraiser. The appraiser values the property, comes back to the appraisal management company, who does a little bit of a quality control, and back to the bank. Today, that takes 14 days and $700. And guess how it's done? Everything is done manually. The appraiser is going out there with a clipboard, with a piece of graph paper, a tape, and a pen, and he's measuring it, he's inspecting it. And how is that supposed to happen? And how efficient is that in today's marketplace? And is it acceptable that you wait 14 days and pay $700? So what we've done is we've prepared and built what I believe is to be the only appraisal platform, services platform in North America. And what we've effectively done is that we have digitized every appraisal record in North America. So instead of, providing appraisals on PDF delivered on XML, we've digitized everything. We're able to, through JSON, download all of the data sets. And so effectively an appraiser can go out there today with an iPad. He can key in everything on the iPad with his finger. He can draw a sketch, because we just recently bought Apex, which is the largest sketching platform in North America. So they can draw a sketch on there, they can put the data in, and effectively they can get a valuation before they leave. Our role is that through this whole digitization of the process is that we want to not only provide the software, but we also want to populate the appraisal records. We want to provide them with sales. We want to provide them with a value. So instead of an appraiser effectively doing one appraisal a day, it takes him that long because of how archaic the process is, he can do up to 25 a day. And if you look at the appraisal, the demographics of an appraiser today, the average age is 62 years old. There's not enough appraisers around. And how can they wait 14 days. What's happening in that 14-day process is the bank are losing customers because you have other different types of lenders, like the Rocket Mortgages and the Zillows, et cetera, that coming in, and they're alternative platforms. And so the banks have to stay efficient, proficient. They have to stay on the tops of technology. So we happen to be the people that have built it. And so our goal is come to us, and we'll go to the lenders and we'll say, instead of 14 days and $700, how would you like a valuation delivered to you in 36 hours for half the price, for even $300?
What's been the response?
Scary good. Like we're just rolling it out. So what we decided to do is start with the appraisers. So let's make things efficient for the appraisers. So give them a digitized platform to be able to work with. We've even built our own appraisal Uber app, so we can make it efficient for the appraisers that are out there. You see the cars driving around, we get an order in, we advise the appraisers to say, listen, you've got another order coming in on the same street. While you're there, let's get it done. We've digitized it, we've got the app, we're handling all the accounting for them with respect to collecting the money and paying the money. And so what we've done is we made the work more efficient for the appraiser. So that was the first step. When we completed some of the application, and of course, you're never done software applications, you're always continually improving on them. But when we got completed in September, from September until December, we had 22,000 applications a month. From January until the end of February, we're up to 125,000 applications a month. And then from February until probably the end of May, we expect to have 250, and our goal is to have 500,000 transactions a month by the end of the year. And why is that happening? We're making life more efficient, and we're making life more affordable. So we're not only taking and dealing with the appraisers, but the next step is let's go to all the appraisal management companies that are out there. Because what they're doing right now is taking the order from the banks and going to the appraiser. It's not working. There's no profits. It's way too expensive. It's way inefficient. So we're basically go to them and say, we'll white label our software application, and you use it. You can cut back on staff. You can make it more affordable. You can, still retain your own clients, still retain your own salespeople. Life is good. So let's do that, with the management companies. And then finally, when that's all running, then why don't we just go to the lenders themselves and say, here's our software, white label that. You control the process. And so effectively, you can see that whole transformation, that going from an archaic $700 in 14 days, so the whole transformation takes place.
And stepping back, there's no other companies that are trying to do this at this point, or they're trying but not successful. Where are we?
We're not aware of, I'm sure there are companies that are trying. We're not aware of anyone that has. We think we're 3 years ahead of everybody. And believe me, it's taken 3 years to get to this process. So I think we've got a nice head start. And while we're at it, Catherine, while we got the valuation done, and while we've got a report now for the lawyer to tell them whether the taxes are too high and too low, and give that to the purchaser, why not offer title insurance too? So the company we just purchased has a title ingestion engine that allows us to determine the ability to get title insurance in less than a minute. And what that done is that's all done through AI and connections, where we do two things. You have to look back. For example, liens on a property, like you forgot to pay a bill, you didn't pay your taxes, some other nefarious claims that may take place. So you have to look back in order to be able to get proper title in that way. But then you also have to look forward. So believe it or not, it's getting so sophisticated today. So you'll partner with companies like TransUnion, where you not only look at the clearness of the title of a property, but then you're also looking at the ability for the person to be able to pay. So some of the AI that is out there is predictability of, will this go into receivership? Will this go into bankruptcy? What is the ability for someone that's in bankruptcy to pull themselves off? Because right now, what is happening is a lot of these mortgages, like you take Rocket Mortgage, for example. Do you know that typically only hold their mortgages for 60 days. And then they're sold off to, a government entity like a Fannie Mae or et cetera. And so what they do is they sell them off. And of course, that costs money to sell off because Fannie is de-risking it. So what happens if you have very predictable title and process where you think you understand who the mortgagee is, what their ability to pay is, what the value is, clearness? Why would they then sell to the GSEs? It's called government service entities. Why would they do that? So I think that we're in for a major transformation, and everything is centered around technology and software. Software, most important. Then ingest that with data and build your analytics, and then you've got a game changer. And it seems so simple, but it's very complicated to get to that. And real estate as a whole, think about it this way: 90% of the 100% of the appraisal management companies out there, with the exception of us, are still doing it like they did it 50 years ago.
Hard to believe.
Bank to the appraisal management company to the appraiser out there slogging it out, measuring with the tape, coming back. That's why it takes 14 days. It's hard to believe.
It is hard to believe. And it seems as though, and I was talking to somebody earlier prior to us doing this interview, the question I asked was, well, where are the Silicon Valley tech guys in all of this? And it doesn't seem as though this is an area that, they are more into the WeWorks. This was the answer I got. They're more into the WeWorks versus these are the major nuts and bolts in laying the railway tracks.
I got a theory on that.
Okay.
I grew up in a small town, and I used to spend my summers on the farm with my grandpa. And he used to tell me stories. I learned a lot from him. But he'd go out in the field, he could grab the soil, and he could just smell it. And he knew, what would provide the best yield, like what kind of crop that he should grow, what kind of herbicides you need to use. And he started way back, I'm not kidding, with a horse and a furrow and then a lead for a tractor. Now the combines, but guess what? You can have the combines, which I've referred to as Silicon Valley, which is the best tech. But if you don't know where you're going to get the best yield, then how do you build the technology? So I refer to us as the farmers. I've been in the appraisal business for 40 years. And quite frankly, you have to know what you need to know. As far as if I have to go to my clients and say, what do you need? It's too late. So for me, it's taking, an understanding of what technology can do. Then I go out and find the really smart guys other than me to be able to build code, take it to another level.
Well, and Gary, that was another one of my questions, because I can appreciate, and I think anybody listening to this will appreciate the complexity in terms of the software required, the data, the analytics, and putting it all together. And I have been curious in terms of where are you finding your human talent? And, when we think about Canada, and some people say Canada has great tech minds, a lot of people say that we've got brain drain, or it's actually in the United States. What's your response? And because your company's in the United States as well. So what do you say to finding talent today, and how much is there out there?
So here's how I look at it. You need someone with a Gordie Howe experience, all right? But you need an Austin Matthews legs. In other words, so there's all kinds of really, really incredibly talented and smart 20 to 25-year-old kids. So if you've got a good coach to say, this is what we're looking for, this is how we think you can get there, build us something so it's quicker, it's cheaper, and it's more accurate. And so it's just that combination of I'll show you any software, and I'll show you where there's a great communication between the practitioner and the builder.
Understood. Thinking about the outlook now for your product and this digitization process, we've got to always consider, I always think, you look at the macro environment as well. So what is your take right now on the macro environment in terms of residential real estate or real estate? And also, of course, with the backup in yields that we've seen on the U.S. 10-year yield today, that's happening as well. But yesterday and the day before, it was fine. How do some of those macro factors play into this? I mean, I can appreciate that tech companies, they're their own animal, regardless of the markets. But when you see that, what do you think about?
For me, you'll be surprised at this answer. For me, it's not about the value; it's about change. As long as there's change, there's lots of work. It's when nothing changes and everything stays still, then that's when the work dries up. And so what you have when you have an economy and you got supply and you got demand and you got all these external forces, whether it's pandemics or whether it's other external global factors that affect the value of real estate, then as long as you have change, then we're going to be extremely active.
Understood. It was interesting. Speaking of active, you did do a private placement the other day that I believe was priced at 70 cents.
Correct.
And traded up to $1.28.
Mm-hmm.
For our viewers to understand, and I spent 15 years on Wall Street at Goldman Sachs doing 12 IPOs a week during the boom. And then follow-on offerings at Deutsche Bank and what have you. It's rare that a stock climbs that much when you do an offering.
So
it's great.
So it's no secret. I've told everyone we're going to grow organically. You need to do that. And I think that I've tried to articulate the plan for us to do that. But you also have to grow through what I deem accretive acquisitions. So in my view, we've got a few things that we have to take into consideration. It has to be real estate. It has to be technology. It has to be accretive. And when I say that, I mean simple. Like if we're trading at 10 times multiple of EBITDA, then I want to buy something at 5 times, right? And it has to be synergistic. So when I say synergistic, for example, we bought the sketching company called Apex. They're 2,200 counties of the 3,300 they're in the US. We need to get into the counties for some of our workflows that we're selling. So this sleepy little company was $1 million of profit and $3.5 million of sales. And that's great. And they've been like that for almost 10 years. Like they've just been doing nothing. We built a little bit of technology, some mobile applications to go into that. And we bought them in October. And since October to the end of February, we signed on $7 million of new contracts, plus we have another $6 million contract on our desk. So effectively, we've taken that little business and we've increased it from $3.5 million to almost 17 million in 4 months. Mm-hmm. That's what you call accretive synergistic opportunities. So there are companies out there that don't know how to get to that next level, they don't have the money, maybe they don't have the sales, they don't have some of the expertise. There's some beautiful, dandy little companies. And so the other thing I didn't say when we buy a company is we always make sure that they have skin in the game. So I want to make sure that when we buy it, that they take an active investment in our company, because first of all, I love what we're doing. I know what we're going. And I always say to them, I think that you're going to do way better in what you keep rather than the cash you're going to take out. And so they take skin in the game. So when we went out to raise some money, I mean, we were only trading at around 70 cents. And how do you go out to investors right now and tell them that I'm going to do a 70-cent raise and I'm not going to give you a warrant? And so what do you think the opportunities of success? But you know what I did? I told a story similar to what I'm saying today, very humbly, because you never know, right? There's always naysayers and there's always not believers, but quite frankly, we almost doubled, as far as the attractiveness. So we wanted 35 million, we could have probably raised 70. It's been met with a lot of I guess optimism, and now the pressure's on because we have to deliver.
Right.
But management does own almost 60% of the company, so we're aligned. Mm-hmm. As I said at the outset, I put $2.5 million of my own money in, a few years ago. That's how much I believed in it, and I take this responsibility very seriously. There's a lot of investors that come in, whether it's $25,000 or whether it's $500. that's everything they have in some cases. And the last thing that I want to do is look them in the eye and say that I let them down.
Mhm.
And there's been too much of that happening in the marketplace. And so that's not going to be who we are. We're going to work hard, can't guarantee success, but certainly we can guarantee that no one's going to work harder.
And just as a teaching moment, I think it's interesting to point out what you mentioned, which is you didn't offer warrants. Why? What should our new viewers or new investors know about that, and why you didn't?
Well, I think it's just a matter of how much confidence you have in the success of your company. It really gets down to, listen, I've laid it out. I think we're going to have great success. We have some major institutions that we're dealing with right now that gives me great reason on why we're going to have that success. We think that people are going to buy our platform. And some take the attitude it's easier to buy than to build. And if we're way ahead of the marketplace and they can do things, quicker, cheaper, and more accurate, then why wouldn't they? So, I was confident enough that we did it. Now, when you look at contrarily, I offer it 70 cents. It goes to $1.15. Everyone is mad at me because they didn't get the opportunity to go in. Everyone is saying to me, well, why didn't you offer it to for $1 or $1.10? But you tell me, when we're only trading at 68 to 70 cents, how do I walk into, an investor and say, I want $1.15? So
Right.
that all happened in 2 weeks. It went from 70 cents to, I think it even went higher than the $1.28. So you don't know.
Yeah, you don't always know when you're going out on a roadshow or a pitch or what have you, what the true demand will be, and or what the right pricing is. That's always the difficult aspect of doing any type of deal, I think. But you didn't. But the point is, you didn't need to sweeten the deal with warrants.
No. Listen, I love our company. I have a lot of confidence, and I think that my story, has, it has a lot of, momentum going forward. And I speak truth, and it doesn't mean that you're always going to execute, but I believe in it strongly.
And we'll wrap it up in just one second. But lastly, then stepping back, what do you see occurring in the real estate market in Canada as well as the United States?
Well, for the foreseeable future, I see nothing but buoyancy. I mean, what is happening in Toronto or what is happening in Florida right now? Listen, what's the alternative as far as where you're going to put your money? You and I talked before the show, and, some are putting it into cryptocurrency and Bitcoin. And I think that everyone has had their sling at the cannabis space, and that's, lost some momentum, and now it seems to be coming back a little bit. You have these trends, but real estate has been here forever. Real estate is not going. They don't manufacture land. You're always going to see change, and there's always going to be a demand. So I think that we're in one of the largest, not one, I know we're in the largest asset class in the world. That's what real estate is.
Amazing. Gary, great to be able to meet you and speak with you and learn about your story, and also your incredible career in real estate. So thank you so much for your time.
It's been my pleasure. Thank you very much, Catherine.
Thank you.